So one of the most common reoccurring subjects that comes up for me as a loan officer is credit and how credit's affected by a mortgage application. There's really two main issues I wanted to go over, and within that, obviously, there's some nuance. Okay, so number one, having your credit pulled for a mortgage application does affect your score. According to Experian, it's a pretty minimal effect of 5 points or below the majority of the time, right? And that's going to depend on how good your score was to begin with, other factors like that. But that's what Experian, which is one of the three main bureaus, is publishing. It'll remain on your report, according to them, for 2 years, okay? So it has a relatively small effect, but it does have an effect, and it will show on your report for 2 years, according to Experian, which again is just one of the bureaus. Do your own research for the other ones if you'd like. The second main factor in this, or main consideration, is if you do multiple inquiries with different lenders, is that going to affect your score? Now, the good news there is something called a shopping window, where you can shop as many lenders as you want for a mortgage within a short period of time, and it'll only count as one inquiry. Now, keep in mind, the other inquiries will show on your report, but your score will only be lowered one time, that 5% or below that I mentioned at the top of the video, okay? Now, the window itself is given between 14 and 30 days. It used to be 14, like a hard 14, and there's been some changes there. A couple things you want to be aware of. If you can, keep it within the 2 week, within the 14, just to be safe. If the lender has some of your information wrong, your name, your date of birth, your address, that can go out the window, where it is counting as a new inquiry each time. I have seen it before. So you want to, even if they don't double check your info, you want to double check, make certain that they have the exact right information, and just be aware, it will show on your report. I've done a lot of loans for people where I see a number of inquiries done recently. Then pretty much what you're doing is just asking, did you take on any new debt? And they tell you no. It's typically not a problem. You know, if you can explain it as you were just looking for a refinance. This was all for the same project. So it's different from auto loans in that way. My understanding with auto loans is every time you have your credit ran, it's going to drag down your score, right? Because you could conceivably buy a new car each time you do that. Imagine buying a new house every time you do a mortgage application. It just is a different consideration, right? So I would say definitely be aware of it, but if you're serious about doing a mortgage, your credit might rely heavily on getting some money out from the mortgage to pay off other debts. You might actually need the mortgage itself to put yourself in a better position as far as credit. And I have a more detailed video on that, so I'm going to leave a link to that video. I'm also going to leave a link to a LinkedIn article I wrote about this issue. It's a little more detailed and has some links in there, so if you'd like to subscribe, I have a free newsletter on LinkedIn. So again, if you have any questions or concerns, please leave them below, or comment on the article itself.